What's up, everybody? This is Antonio here to bring you another episode in the series of how many shares of a certain company do you need to own to make $1,000 a month, $100 a month, and even $100 every single week. So these videos are definitely fun to record because we do go over companies that you guys do actually ask me to go over. We pull it up on Seeking Alpha, read a little bit about the company profile, and then look at the charts for a little bit, see their performance, and then we pull up the dividend scorecard, look at the dividend summary, and then we pull up the calculator, crunch the numbers to see how much you need to own to make the $1,000 a month, $100 a month, and $100 a week. And then we wrap up the video by looking at the dividend yield, showing us when the best opportunity is or currently was in the past when you would get the best dividend yield. So let's go ahead and get started, guys. But the next one on the list is actually MPW. If I pull up Seeking Alpha here, so MPW is Medical Properties Trust Inc. Currently trading about $9.19. If we pull up the company profile, we can read a little bit about them. So Medical Properties Trust Inc. is a self-advised real estate investment trust formed in 2003 to acquire and develop net lease hospital facilities. From its inception in Birmingham, Alabama, the company has grown to become one of the world's largest owners of hospital real estate with 444 facilities in approximately 45,000 licensed beds in 10 countries and across 4 continents. MPT Financials model facilitates acquisitions and recapitalizations and allows operators of hospital to unlock the value of their real estate assets to fund facility improvements, technology upgrades, and other investments in operations. So they are in the real estate sector. Industry is healthcare REITs. Employees are showing about 119 employees. They were founded in 2003. And if you do want to read a little bit more about them, you can go to medicalpropertiestrust.com. But guys, if we look here, we can look at the summary. So on the year to date, they are actually down 20.29% in the red. On the 1 year, they are actually down more, so 40.98%. That's around 50%, pretty bad there. On the 5 year, they are down 34.54%, so pretty bad return for a 5 year return here on the capital appreciation. You'd actually be down if you had bought back. It would be trading around $14, almost $15, and now it's worth $9. On the 10 year, they are down 35.28%. Again, pretty bad on the capital appreciation there. And then total since they've been publicly traded, which I think would be 2003, but it goes only to about 2005. But they are down 15.09%. So definitely not something I like to see here. I would love to get capital appreciation on top of the dividend. But if we look at the 52-week range, 52-week low has been $7.10. 52-week high has been $17.36. FFO is 1.55. And then we got the dividend rate at $1.16, which comes out to be a dividend yield of about 12.57%. And then the market cap's of 5.52 billion market cap here. If I show you guys here the dividend scorecard, we can read a little bit about them on the dividend summary. Again, they are in the real estate sector, so a REIT. On the dividend yield, they are 12.57%, so a very high dividend yield that they do pay out. Could potentially be a dividend trap, so you guys got to be careful about that. Annual payout is $1.16, so for each share you do own of this REIT, you would get paid $1.16 annually. Payout ratio is 74.66%. So plenty of room to grow this. It's very strange as well, especially because the REIT typically has a higher payout ratio. 5-year CAGR here is at 3.43%, very low 5-year CAGR, and then dividend growth is 10 years here. Dividend frequency is quarterly, so they do pay out 29 cents every single quarter. Yeah, so let's go ahead, guys, and pull up the calculator and we can start crunching some numbers. So first one we do want to do is let's see how much you'd have to own of this REIT to actually make $1,000 a month. So we want to make $1,000 a month. There's 12 months in a year, so we multiply it. So annually we need to make $12,000. You actually take the $12,000 divided by the annual payout, and you'll see $1.16. That actually gives us the total number of shares we'd have to own. So 10,344 shares is what we'd have to achieve to actually make roughly $1,000 a month. And actually multiply the shares, and then you'd multiply it times the share price, which is $9.19, and that means that we'd have to have currently invested about $95,000 in this REIT, and you'd be roughly making about $1,000 a month. Again, this could be a dividend trap, especially with the poor performance over the time they've been publicly traded. They've actually gone down, so not the best thing there. But a quick way to calculate this, if you are interested, you could actually take the $12,000 you need to make annually divided by the dividend yield, which is the 12%. So divided 0.1257, and you would get roughly around 95,000 as well. So that's a quick way to calculate that. Let's go ahead and do the next one, which is $100 a month. I think this was a little bit more achievable for majority of the stocks because you do require a lot less capital. But you could actually take the previous answer divided by 10, and that would give you that. But since we do have the calculator, and maybe people want to see the math behind it, again, you would take the $100 we want to make a month, multiply it times 12 because there's 12 months in a year. So annually we do need to make the 1,200. Then you actually just divide it by the annual payout, which is $1.16, and again that would give you the total number of shares you'd have to own, so roughly about 1,034 shares. Then you multiply it to the current share price, $9.19, which means that you'd have to have about $9,500 invested in this, and you'd be roughly making about $100 a month. And then again, if you were to include for dividends, this would require a lot less capital, but capital appreciation would be down. But let's go ahead and I'll show you a quick way to calculate this. Again, you can take the 1,200 that you need to make annually divided by the dividend yield, and you'll see we roughly get about $9,500. Let's go ahead and do the last one, guys, which is $100 every single week. So we want to make $100 every single week. There's 52 weeks in a year, so annually we do need to make $5,200. So you actually divide the 5,200 divided by the annual payout, which would give you the total number of shares we do need to own, which is 4,482 shares. Then you just actually simply multiply it again by the share price, $9.19, and you'd have to have roughly invested about $41,196 invested in this, and you'd be roughly making about $100 a week. So that's pretty great to see. Again, be careful with the dividend trap. So 5,200 divided by the dividend yield, which is 12%, almost 13%. Again, you get about $41,368. Pretty high dividend yield here, guys. May not be sustainable, so you got to be careful with it. Again, just making sure. And then, guys, let's go ahead and wrap this up with looking at the dividend yield. So if we look, this actually goes to the 5 years, so all the way to about 2018. 2018, it was trading around 6%, 5%, and then in 2020 crash, it did spike up some to about 7 or so, 8%. and then it actually started going back down to about 4 to 5. So that's typically where it trades. And recently, around April or so, May, it's been actually spiking up, and that is potentially because the share price could be moving actually downwards. So you guys gotta be careful with that. So potentially, if this is a good long-term investment and you believe in it, it might be the best opportunity to enter now. So just be careful with this. Make sure you have a high conviction on them. I'm definitely not invested in them, and I'll probably be staying away from them. But let me know in the comment section if you do invest in this real estate, medical properties, and MPW. Don't forget to subscribe with that notification. Definitely would appreciate it, guys, if you help me reach the 20,000 subscriber mark. Definitely goes a long way. As well, if you wouldn't mind dropping a big thumbs up. And I will talk to you guys later. Take care, stay safe out there. Bye, guys.